All right, good evening. Welcome to the Thursday edition of. All right, I'm sorry for that. I could hear my voice echoing back to me, so I had to adjust my screen and my volume. Um, so today I'm gonna be brief. I'm not gonna take too much time, because there's really nothing for me to show you today. I haven't got any tricks to show you today, unfortunately. Fortunately, I just want to talk to you, um, for it's important to know that, it's not everything about trading is about the charts, right? Not all the time it's about the charts. It's 10%, or maybe I'll say 20% the charts, the rest is all in your mind. And one of the things I want to talk to you today, I think I've done this session before, but I'm gonna do it again. Maybe you might have forgotten, and sometimes repetition will kind of remember you. Because if you don't repeat it, then you're gonna forget. And if we keep repeating that same thing, you might remember, so that you can use it in your trading to help you. So today, I'm just gonna talk to you directly, so that you can start learning, that the market is not all about the charts. It's also about, your mind. Now, one thing that is gonna kind of impede your trading, or one thing that is gonna impede your growth in trading, is your ability to know when to trade and when not to trade. That it's something that you should, and I cannot emphasize that enough. You should know when you want to trade and when you don't have to trade. If you don't have anything, okay, if you don't have anything that gives you the go ahead to trade, and also gives you the go ahead not to trade, I will suggest you start looking for that. Because if you don't, you are going to struggle. And when I say struggle, I don't mean you're going to struggle with the charts. No, you're not going to struggle with the charts. You're going to struggle in general, because the market is always open. Okay? The market is always open from Sunday evening to Friday evening. So the fact that it's open means that the opportunity to make money starts from Sunday evening all the way up to Friday evening. But that does not equate to you being in the market from Sunday evening till Friday evening, right? You have to know that there is time that you want to be in front of the screen. There's time you don't want to be in front of the screen. And there's time to actually be in front of the screen and take action, which is take a trade, and time not to be in front of the screen and not to take a trade. Okay, so there's two different things: time to be in front of the screen and not to take a trade, and time to be in front of the screen and take a trade, and time not to be in front of the screen at all. All right, you have to be able to define that. And I cannot help you with that, because everyone is different. I'm just giving you, opening your mind to other aspects of trading, where if you don't pay attention to it, it's gonna be a problem. Okay, it's gonna be a problem, and that problem will most eventually be a cycle. And what do I mean, or why am I saying what I'm saying? If you've taken note of what happened this week, right? What happened this week is basically we had a lot of high impact news, um, and it caused the market to move in a way that probably wouldn't make sense to a lot of people. Even myself, some of the moves that happened, it's I was scratching my head as to what is actually happening, because these moves are not justifiable technically. If you're looking at it from a technical standpoint, it's not it's not making sense. Okay, the moves are not making sense. Therefore, if you trade during this period, then obviously you are going to take a hit. All right, you are going to take a hit simply because the market is not symmetrical. It's not going in a technical, let's say price moves up and then it comes back and then go back up again. Like it might go up and then down and then up and then down again, things like that during the course of this week. So the last time I talked about this, I gave you when I don't trade, or when I'll be in front of the screen, but I'll not be taking any trade. I'll just be observing. All right. I'll just be observing and looking at what is actually going on, if I can understand the market as it's trading during that period. So weeks like this, and I'm gonna write them again. And if you want to write them down, rate announcement. Whenever you see on the economic calendar that there's going to be a rate announcement, you want to have that particular day. Okay. First of all, the week, whatever week that it is in, but the specific day that the news is gonna come out. You wanna know that day and note it down. That very day, if you want to be successful trader, you want to not take any trade. Okay, that very day, you want to avoid taking not even a demo trade. You want to just sit there and watch price. Okay, you want to sit there and watch price, and I'm talking about rate announcement. Rate announcement are very important when it comes to obviously currencies, because market moves based on, or investors are always looking at the rate to position themselves. So when the rate announcement is about to hit the market, which when the news is about to be released, quote unquote, smart money are already positioned. Okay, smart money, they've already positioned themselves because they know ahead. You don't. So whether the rate is gonna go up or the rate is gonna go down, you have no idea. And you also don't know if the rate goes up, is it gonna affect price to go up? Or if the rate goes up, it's gonna affect price to go down. If the rate goes down, is it gonna affect price to go up? Or is it gonna affect price to go down at the time that the rate announcement is going to be released? Therefore, you don't do anything that specific day that the rate announcement is going to be released. Now, most of the time, obviously, rate announcement is not going to be released on Monday, mostly not Tuesday. It depends on the currency. But whatever day it is, that particular pair that the rate announcement is on, you don't want to touch anything. So if the rate announcement is on euro, you don't want to touch any euro pair. If the rate announcement is on GBP, you don't want to touch any GBP pair. If the rate announcement is on dollar DXY, you don't want to touch anything at all. Okay. When it's on euro, you can touch CAD yen, Aussie yen, all those other pairs. If it's on GBP, you can trade CAD Swiss, you can trade I don't know, CAD JPY, you can trade all of that. But when the rate announcement is on DXY, which is the dollar index, you don't want to touch anything, right? The reason why you don't want to touch anything is because the dollar is king when it comes to forex. Okay, the dollar is king. It controls everything. At the international level or the international market, everybody trades in dollar. Whether you come from Korea, whether you come from China, whether you come from wherever part of the world you come from, you trade the dollar. Okay, you are gonna convert your money into dollar before you can purchase anything at the international level. So the dollar is king. So the interest rate on the dollar, every country is looking at. Okay, when there is interest rate on euro, there will be some countries that don't care about what euro is going to do. Same thing with the British pound. But when it's the dollar index, everybody, even the smallest country in the world, is also interested to see what the dollar is trying to do. So with that, you want to stay out of the market when the dollar index has an interest rate announcement coming. Okay, because it's going to cause the market to move that might not make sense to you, and it's going to cause you to obviously either chase price, or you already be in a trade expecting price to do something and it wouldn't. Okay, you be expecting price to maybe go up and it wouldn't, or you might be expecting price to go down and it wouldn't. Okay, so you want to use the opportunity to know when these kind of announcements are going to be coming out, and then you sit on your hands. That very day, you don't do anything. You can watch price, not even demo trade. Okay, don't demo trade, don't do anything. Just observe price. Spend some time and look at what price is doing with that news event. Okay, and it will save you a lot. After the news, okay, it's just one day. Okay, it's just one day event. After the news and after that day passes, you can go in and start doing whatever you want to do. All right, but some the mindset of some traders is like, because that day presents a lot of volatility, meaning that very day there's going to be a lot of price movement. Okay, there's going to be a lot of price movement, therefore they think they can capitalize on that movement and make lots of money that day. Okay, simply because they think that price is going to move so much, so they're going to catch some groundbreaking trades. But it's not like that. Okay, if you saw what price did between yesterday and today on most of these pairs, you might be scratching your head. Okay, you might be scratching your head, what actually is trying to happen, because price is not doing maybe what you expect it to do, or price is not even moving in your favor, therefore causing you to be confused as to what is going on, At the same time, either you are in a drawdown or you're trying to fight to get your account back because you've taken some losses, right? Whichever one it is, I want you to, um, first of all, if you've traded um, during this time of the year, not year, during this time of the high impact news, if you've ever had any experience with it, what I want you to do is actually write your experience down. Okay, write that experience that you had during that period. So let's say yesterday, whatever experience you had with price, whether good or bad, write it down. Okay. Then the following time you have that same type of event, which is rate announcement. If you do engage with price, write your experience down, right? And over time, you will see for yourself why you want to take that day off. Okay. Over time, you will see for yourself why you want to take that day off. Because by writing it down, what you end up doing is that you are recording your experience in the market, and with that experience you become wise. Okay, with that experience you become wise, and then you will make a kind of a professional trader's decision. Because if your experience is bad, no one will tell you. Okay, if your experience is bad, no one is going to tell you that you don't have to be in the market. And if your experience is good, no one is going to tell you either, because you know what you did that very day. And then if the news comes out, that's what you're going to do. But I want you to record it, because if you don't record it, you're going to forget. The day is going to come and you're going to feel like it's the same. It's another same trading day. You're just going to do what you're going to do. But if you record it down, when the day comes, you will have something to remember, right? You have something to remember, and you probably wouldn't go in trying to hunt for trades as usual, right? The other thing that you want to also note down is NFP. Okay, NFP, non-farm payroll, which comes in the first week of every month. Okay, the first week of every month. That also affects the dollar index. So that first week of every month, usually what you want to do, because the news comes out on Friday, you can trade from the Monday up to the Wednesday, maximum Thursday morning. By Thursday afternoon, you don't want to have any position, and then on that Friday you take it off, and then you observe price. Okay, you take it off and then you observe price. If you do this very thing here, right, one, and it's not just going to save you money, it's going to save you peace of mind, because it stops you from worrying about what you're supposed to be doing, what pair you're going to trade. Is it going to go in my favor? Because all that kind of thoughts will be running in your mind when the day approaches, when the time is approaching. I've been there, I've done it, like literally at 1 p.m. Friday, when it's NFP 1 p.m., my heart starts beating so fast, and I'm thinking, how is the numbers going to be like? Is it going to cause price to move higher? Is it going to cause price? Because I'm already in a trade, and I'm thinking, is it going to go my way or it's not going to go my way? Because you don't know, right? Anybody that tells you they know what price is going to do when NFP is going to come out, um, rate announcement is going to come out, if they know exactly what's going to happen, they're lying, right? They are lying, unless they are, an insider, which I don't think they will survive because insiders are always put into prison. Unless that person's an insider, you would have no idea what price is going to do. Therefore, you have to play it safe. Okay, play it safe, sit on your hands, don't do anything. Okay, like I said, I'm not gonna make this video very long because it's boring, and when it's boring, people don't want to hear it. So I'll try and make it as short as possible, and within the next 9 minutes, I'll be done. Right. So bear with me for the next 9 minutes, and then I'll release you to go. Because I know when you're not showing those, skills of getting in here, getting out there, nobody's interested. All right. When you're not showing, um, tricks and how to catch the low of the day or how to catch the high of the day, nobody's interested. But these are the things that you probably need more than the low of the day, because if you catch the low of the day today and then tomorrow you try to do again and there's a news, you you don't put your stop loss in, everything that you caught with the low of yesterday gets wiped out today, then you're back to square zero. Right. So it's much important to have the mental skills of knowing when to be in the market and when not to be in the market. It's important. And weeks like this week is a week that you literally had to sit on your hand, especially from Wednesday, because Monday, Tuesday was absolutely nothing. Wednesday, you didn't have to do anything. Thursday, you didn't have to do anything. And then probably tomorrow, you can go back in the market because there's no really high impact news on anything. So you can go in and then do what you have to do. And I know some of you might be thinking at the back of your mind, I wish I sat on my hands on Wednesday. I know it. I don't know why I know it, but I know it. That some of you might be thinking, I wish I had sat on my hands on Wednesday, or I wish I had sat on my hands on today. Okay. Now let's just do this. If you are here and you feel like that, just drop me a one. Right. If you feel like you should have sat on your hands yesterday and today, just drop me a one. Okay. Drop me a one so that I know that what I'm saying is true. There you go. Right. You should have sat on your hands. And if you did, you would have saved yourself, a lot of money. Oh, I won't say money, not just money, because money can be recovered. That mental stress, of, okay, is it gonna go up? Is it gonna go down? What is it gonna do? Ah, that feeling, emotional distress, that it 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 damages you more than the money that you're losing, because what that builds inside you, it's negativity. So you become scared. Okay, you will become scared of the market, and tomorrow a trade will pop up, and all your mind will be thinking is, if I get in, is it gonna stop me out? Is it gonna do the same thing? Right? Is it gonna do the same thing it did yesterday? Trust me, I've been there, I've done it, and it's not a good feeling, because the very next day you're gonna see a trade, a beautiful trade, and your mind will remember that stop that took you out during that news event. Even though it's just a news event, um, it's not normal price action. It was just news event, but the damage or the emotions that have been recorded in your mind or in your subconscious mind, it will keep playing forever. As long as you're going to trade, it's going to play forever. So that is the one I want you to avoid having, because that's the one that is going to kind of get you into trouble all the time. Okay. That's the one that is going to get you into trouble all the time. Because the moment you start trading again, the next day that you start trading again, what that is going to do to you is it's going to it's like it's a reminder. It's going to pop up and it's going to keep telling you, remember that loss, remember that loss, remember that loss. And all that is going to do is going to cause you to be scared of the market. And once you're scared, you're going to start attracting the very thing you're scared of. Okay. And it's just going to confirm what you're feeling within. So that's why, if it was just about the money, then obviously we don't have a problem because we're going to get it back. But it's not just about the money, it's about the emotions that is going to be left behind once um the the period is over, once the news is over and the damage has been done. The emotions that will be left, or the emotions that will be recorded, okay, or the memory that will be recorded, that is the painful one. That's the one that is going to cause you the damage. So in order to avoid that one, that's why I'm saying, know that the news is coming. Just sit on your hands and wait. Observe, don't engage. Let the news finish. So you don't have any recorded memory. You don't have any emotional pain. You don't have any emotional worries. So the next day, you go in feeling very refreshed. You don't have anything to worry about. You're just going to go in. You see the trade, you're going to take it, and nothing is going to stop you. Right? You're not going to have all this noise in your head trying to tell you how bad yesterday was, or how bad that trade that you took was. Right? Now, you're gonna get to a time, right? You're gonna get to a time, a point in your trading where you can trade these news. Okay, you can trade them, and if you take a loss, experience is gonna tell you that it's just a loss. So you're not gonna record these memories because you've gone past it. It's like now you are bulletproof. Those things don't harm you anymore. But for now, you're not there yet. Most of you are not there yet. Um, you don't have, I would say, a consistent monthly return. So if you don't have a consistent monthly return, you are not there yet. So these events, if they harm you, is going to hunt you down. But if you're consistently making profit from the market and you trade this event, right, the losses that you're going to incur, or the losses that you're going to take, it's just going to feel like normal. Okay, it's just going to feel like normal. It's just a normal day at the market. It didn't go well, you move on. But right now, it's not normal for you. I can trade during this period because if I take a loss, it doesn't hurt me. I feel like, you know what, that's just normal. Or even though I'm not going to trade, but if I do, that's normal. But it wouldn't be normal for you because probably, and I know, these are the times that a lot of people do over leverage. Okay, you're going to take a big position because you think you've got the the trade that is going to make you a millionaire, right? So they're going to take big positions. For some weird reasons, it is true. These are the periods that people actually go in feeling like they're going to break the market. Okay. So try your best to know these dates first of all. The economic calendar is there I think 6 months, sometimes 7 months in advance. So you know when these economic calendar is showing you when there's going to be some announcement. Okay, so you know well in advance when these announcements are going to be coming. You prepare yourself so that when that day comes, you are ready to sit on your hands, not to have any emotional you're not going to have any emotional attachment to the event. Okay. So with that said, like I said, I'm not going to make this video very long. That's all I wanted to talk to you about today. um, I hope you've taken it on board, and the next time that this event is going to come, we are going to have another same session, and I'm going to talk about the same thing, so that I'll make it kind of a routine for you um, to remember you. So if you do it again, you'll be remembered. If there's another rate announcement, I'm gonna bring it up again. So if you do it again, you will be remembered, and over time, it's gonna build something in you, and probably frustration, and hopefully that will change, because I know I know next time you're gonna do it again. How do I know? Because I've done it. Okay, I've done it. For some weird reasons, you will get yourself into a position where, um, when the news is about to come out, you probably be stuck in a trade. Okay, when the high impact news is gonna come out, you be stuck in a trade, and you want to get out, and you can't get out. So I know it's gonna happen again. So I'll make a routine to remind you every single time these events are on, so that it builds something in you. And repetition is a very good thing. The more it repeats, the more it's gonna, get into you. If I do it once and I don't talk about it again, you're gonna forget. So the next time you have this event, I'll bring it up again, so that I will remind you that this is a time for you to do nothing. And last thing before I go, okay, during the week of Christmas, which is next week, you want to trade up to, if you're going to do any trading at all, you want to trade up to Wednesday. Okay. You want to trade up to Wednesday. And then Thursday, which is 23rd, 24th, take that days off. And the following week, I think we start from the 27th, right? 27th, 28th, you don't do anything. If if you want to be disciplined, then take the rest of the year off, and then come back the following year. Okay. If you want to be disciplined, only trade next week, 23rd, 24th. I'm sorry, trade up to 23rd, which is the Tuesday. Um, sorry, 22nd. Trade up to the 22nd, which is the Wednesday. And then 23rd, 24th, you don't want to do anything. And then break, and then come back the following year. Have that time off, reconsider what you've done for the whole year, and then consider what you're going to do the following year. Use that period to, reflect on yourself, on your journey throughout the year, what you want, what you've accomplished, and what you're planning to accomplish for the next year. Read some books, study, and then get yourself set for the following year. Okay, it's very important. Just have a break, and then energize yourself for the following year. All right. So that's just another reminder that if you can use it as in a routine, every year you break, and then you re reassess what you've done, recalibrate what you're gonna do, and then you wait till the following year. I think The following year we start from the 3rd. So usually the first week of the year, there's only one pair you want to trade, which is the JPY. Okay, usually that pair gains some strength. So I'm just tossing in something in there for you. The first week of the year, you want to focus on JPY pairs. JPY usually is strong, so JPY goes up, and most of the yen pairs will drop. All right, so I'm tossing something in there for you. So once you start back on the 3rd, which is what this next year is going to start with, Monday the 3rd, you want to just look at yen pairs, and if you can find something, then you trade that. If not, don't do anything on any other pair, and then you wait till the second week of January, which is the 10th. Then you can go back in and start trading anything you want to trade. All right, so that's all from me for today. I appreciate all of you for coming. It's not the best lesson out there, but this is what you need, because it's going to save you in the long run, right? It's going to save you in the long run. And hopefully you find this helpful. So till then, I will see you guys next week. Next week will be 23rd, I presume. Yes, next week will be 23rd. I'll see what I'll come up with. If there's anything that I want you guys to know, I will let you know. All right. So take care of yourselves. Have a wonderful week. And then I'll see you guys next week. Okay. Take care.